I recently spent some time with a Native American healer. He's a deeply Christian. I walked into my session with him and he read me like a book straight away. Of all the things that came up in our session, his advice to me was very simple: show up, deliver, move on. It was really sort of at the beginning of this transition I was making in terms of moving towards more intentional, diverse investing, all the big things I was carrying and all the things I was sort of shifting as I looked forward. To just break it down so simply was so helpful.
I'm Aoife Devitt, and welcome to the 50 Faces podcast, a podcast committed to revealing the richness and diversity of the world of investment by focusing on its people and their stories. I'm joined today by Kate Nevin, who is President and Portfolio Manager at TSWII Capital Advisors, a role she has held for over 20 years. She is active with many industry groups, such as the Academy of Institutional Investors and Nexus, and community organisations which are focused on conservation and gender equality. A 2014 Riley Diversity Fellow, she is passionate about aligning value and investing in diversity. Welcome, Kate. Thanks for joining me today.
Oh, thanks for having me, Ethan. I'm glad to be here.
Well, let's start with your background and career journey. Can you talk about where you grew up, what were your early interests, and how did you come ultimately to enter the world of finance and investing?
Sure. It's sort of a circuitous journey, but one that I feel like brought me to exactly the moment where I'm meant to be sitting right now. I grew up in sort of the foothills of the Appalachians in Tennessee, part of a really large and connected family. I spent a lot of time outside, a lot of time with my nose in books, the oldest of my generation. So I also sort of felt a certain sense of loyalty and responsibility to family and siblings and younger cousins. And, it was a lovely childhood, very privileged to have such a wonderful place to grow up and time to spend outdoors and read. I think I actually, in the early days as a reader and aspiring writer, had ultimately wanted to be a novelist along the likes of, I spent many years obsessed with Hemingway, Eudora Welty, and all of the wonderful authors I couldn't get enough of, and somehow found my way to finance. So that was a little bit of a left turn, but one I'm delighted that happened. I think life is interesting like that. And sometimes we just have to follow where it leads. I moved to New York to work actually sort of towards my writing career and ended up on Wall Street, which wasn't too much of a surprise. I had spent some time in my late teens and college days tagging along with my father, who had at that time been working with our family office and was an active investor in hedge funds.
Well, that sounds completely idyllic, that upbringing. I'm thinking of all those novels I read that were set in the South and the summers spent outdoors or in books. Just in terms of your writing, so can you talk about how you use maybe the skills from writing in the analysis that you do today?
Sure. Yeah, that's kind of funny. I remember, had left consulting in DC. I was writing research reports, sort of white papers for Fortune 500 companies around best sales practices. So using my writing brain, but not really the creative writing brain, and then moved to New York to be said writer, like I mentioned earlier, and quickly wondered how in the world I would feed myself or pay rent. And so certainly have a deep appreciation for writers that make it. And that's when I sort of had a friend who said, "Hey, you're smart. I mean, you should interview on Wall Street," which is ultimately what I did. I got a job at Lehman Brothers. And I remember a lot of the guys on my team saying, "Well, now you know that you've ended up at Lehman on the sales and trading floor. Don't you wish you had studied, economics or statistics in college?" Because I had come out with a creative writing degree in Southern Studies. And I thought, no, absolutely not. All this stuff I can learn, just throw me into the deep end. And I'm so grateful to have had that really broad base of how to write, how to communicate, how to read deeply. I think those are skills that have really helped me call upon some of the empathy and deep thinking in terms of financial analysis, and I write monthly letters to my investors. And I think being able to communicate the world of finance to a very broad spectrum of family members and endowments and foundations is really quite a gift. I think it's a lot of the industry jargon and terminology that can sometimes scare people away who would otherwise be quite curious about sort of the financial world and ways to invest and how to get started. So yeah, I actually think that my early writing and reading and my passion still with books today feeds well into a new way to articulate, I think, some of the broader topics and themes in financial investing to lots of different sort of folks that have different experience levels in terms of accessibility to that.
It's so true. I think the art of speaking in plain English and writing in plain English is something that is often overlooked. And I sometimes think that jargon, the complexity is a front or a gulf, maybe a moat between ordinary investors and markets, and it perhaps shouldn't be there. But I'm curious then as to what made you leave Wall Street and move back to Tennessee today, or where exactly are you based today?
Yeah, today I'm actually fortunate to be in Charleston, South Carolina. The headquarters of where I'm working now is Chattanooga, Tennessee. We also have an office in Charleston, South Carolina. It was interesting. I was so happy with my job at Lehman in the early 2000s. I had a great boss, I had a great team. Clearly, the dynamics were quite different. Sometimes it felt for women back then, but I really was fortunate to fall into a really supportive group. And I think I would have stayed there for many years. Who knows? I could have stayed there until it all came crashing down in 2008. But 9/11 happened while I was up there. And that was, as a young 20-something just starting out in the world, was a pretty big shock. And I realized really sort of at that moment how far I was from my family. At that time, I was doing long distance dating with my then boyfriend, now husband, who was in Charleston. And I think my priorities really just shifted. And I stayed on for about another year, but around late 2002, moved down to Charleston and never looked back. So I've been here about 20 years and glad I made the move. I'm now happily married with 3 kids and have got a great team here in Charleston with me, and delighted to get back to New York now and then, but good to be back in the South.
And do you find you get the same access to managers, to the investment, I suppose, ecosystem from there?
20 years ago, not so much. I was on the road quite a bit. It was really easy to get to New York and other big cities from Charleston, which was super convenient. It's a little bit more of a headache flying in and out of Chattanooga sometimes, but I had the ease of many direct flights. So I spent a good bit of my time back and forth to New York, really in the first 10, 15 years. It started to shift a little bit, just sort of more financial exposure across the Southeast. Clearly, we have Charlotte, North Carolina, Atlanta, Georgia, some big cities in the South that are known for banking and investment. Charleston really has kind of come into its own as I think Secret got out and people realized you could live in Charleston and still have, a New York presence, or get to Charlotte if you need to. The quality of life is very high. And I think that drew a lot of family offices. When people began to work remote during COVID too, I would say we were a huge beneficiary of people, working from home and working remotely. So now it's quite convenient. I've noticed that managers are delighted to come through Charleston. It's a great place to visit. So I use that to my advantage.
Absolutely. I've heard many a manager speaking of relocating there themselves. So clearly a lot of allure. And let's talk then about what's on your mind today as an allocator, because you mentioned moving down there 20 years ago. Obviously, things must have changed over the course of both COVID and 2022. What do you find is on your clients' minds today? What's on investors' minds today?
Really something that I've dug into, and it really did start around 2020, and when we were in the depths of COVID, connecting with a lot of women in my network. And, we were all at home and we were learning to be, I know you can relate to this too, we're learning to be chefs and teachers and coaches and still working. And all of a sudden we had all these tasks, and it really was tough for women to manage all of that. Of course, there were silver linings, but we kind of saw the start of what has been called a she session, where women were really kind of dropping out of the workforce to support their families, to take care of their parents, their kids, their communities. And I really started digging into where are the women in my industry? Where is the diversity in my portfolio from my seat as an allocator? How can I better support women through my investments and through my network. And so really began to dig in 2020 and found that a lot of other investors and allocators were thinking this way as well. And, really started to take a hard look at diversity, women-led and gender diverse teams, BIPOC managers, and started to build up this pipeline to really begin to shift some of the assets towards these gender diverse teams that really had been, for many reasons, overlooked. It was such an exciting journey. It took me a couple years, and I continue to broaden my reach and my network and connect with like-minded investors. But I would say that really, AFIN, is really what's at the forefront of my mind now, is really how to move the needle on assets under management by diverse teams and women-led teams. I think that's so important right now.
Well, we will definitely dig into that. And I've never heard the term she session, but it's the perfect way to capture that staggering, it seemed, one step forward, two steps back situation we seem to be in just when progress looked like it was being made. Heartbreaking to see, the disproportionate. Yeah. I remember during COVID, we actually held an internal podcast to discuss the experience of parents. And it was actually heartbreaking to hear the strain that parents were under. And again, many women taking the lion's share of that strain. So how do you go about that then? We've had many female founders on this podcast speaking about that long time from getting a fund off the ground to getting to that critical mass. Everybody is running out of time. How do you go about ensuring that this next generation is funded and allowed to flourish?
I think that's a really important sticking point right there, and quite a point of pain as well. I've enjoyed listening to some of your previous interviews. There's so much wisdom in terms of why this is important and also how hard it can be for these diverse teams to access dollars. I hear a lot of high-level discussion around this importance of investing in gender diverse teams. I feel like really it's been especially pronounced since 2020. But from my seat, I still, I see scant dollars moving that way. And it's frustrating because a lot of it appears to be optics, especially with, I think, some larger firms that really sort of tout and market diversity, but are really only putting, basis points to women-led teams, nothing really truly meaningful. I was in a small group Zoom a couple of weeks ago with some diverse managers and investors that were looking to shift assets towards diversity. And I heard this data point that $69 trillion is currently managed in active managed funds globally. So that's $69 trillion in managed assets globally, yet only 1.3 of that is managed by women or minority-owned firms. And I think that is shocking to just pause there and think that here we are in 2023 now, and 1.3 of $69 trillion is all that's under management with women or minority firms. And I think that is really just unfortunate and a big miss on the part of allocators and investors, because we see consistently over and over again that female-led teams and diverse teams tend to outperform and provide better risk management. So I think as I move forward into this new year, I am just even more dedicated to seeing that 1.3% really grow and doing what I can to move that needle.
It's frustrating, isn't it? Because sometimes there are maybe specific sleeves set up dedicated to female managers, and they don't seem to do particularly well, because then you wonder, is just this too niche or too satellite? It's not really mainstream. Right. And then, unfortunately, when it comes to mainstream, many of these firms aren't large enough to make the mainstream, to get that kind of large allocation. So when you're working with some of these firms, do you provide any advice, insight into how they can maybe help to grow their asset base beyond your allocation?
Sure. I think what's becoming really important to me is building up the ecosystem. So really leaning into no IP, no proprietariness to any of this, right? Really linking arms and seeing this as a collaborative effort to move sort of into the future versus, not wanting to share manager names, not wanting to make connections. Not seeing that competition in portfolios, but really saying, here are a handful of women I'm invested in, women that are in my pipeline, women I am super impressed with, and sharing those names and connections and intros broadly. I've really found that that seems to be a big shift from, say, maybe 20 years ago when I started at Lehman. And really then it was so much optics. There was this sense that you needed to have a woman or maybe two, but that was it. And so there was sort of an air of competition between women because there might only be one seat. Now I think there's a broad recognition that more diverse teams are more meaningful. So you're seeing more women step up and create space for more women to come through. And so it's a less of a elbows out and more of a linking arms. And I think that will really over time help. There's lots of programs and platforms out there, and I've been encouraged to see so many people really stepping into a niche, whether it's introducing LPs to GPs, whether it's the conference circuit, whether it's that more academic white paper approach and data analysis. I feel like there's a lot of really incredible teams, both women and men, leading the way here. But from my seat as an allocator and what I'm noticing with other allocators and family offices and foundations and high net worth individuals is the more we share these diverse teams that we're investing in, that we're impressed with, the more we can elevate the exposure of these fund managers and really share the information we have broadly. I think that helps. I think that really begins to lift the ecosystem and build more bridges to capital.
And before we look at some of the links between some of these diverse fund managers and performance, which you've got some interesting statistics there I'd like to dig into, just when you're looking at some of the barriers, because you mentioned the She session, and this all unfolded very, very quickly, some of the dynamics changing. I heard one of the Michael Lewis podcast where he spoke with somebody who'd been in his Liar's Poker kind of cohort back in the 80s. And she suggested that things were worse now. Things had actually gone into decline in terms of inclusion of females, maybe because of other factors such as the price of childcare or other expectations, or maybe the higher barriers to entry to starting a firm. Have you seen any, if you could pinpoint any key weaknesses that you see, whether it's childcare or just the higher barriers to entry, do you see anything where some of the female fund managers kind of trip up time and time again?
Yes, I think a lot of it has to do, well, unfortunately, in this country, we have the gender pay gap is just, I wish I had more data on that recent study that was put out, but really, if we made efforts on the gender pay gap, I think that would, I think they said back in 2017, we would have virtually eliminated it among white male and female with a sustained effort there. That's crazy to see because it doesn't seem like we're getting any closer. If anything, that pay gap is widening. And, that creates a knock-on effect too, as you mentioned, Ethan, about childcare. We don't have universal childcare. So there are lots of things that women must navigate on their own, which makes it that much harder, I think, for them to dedicate the time they need to launch a new fund, which is really a 24/7 endeavor. And that's unfortunate because on the flip side, to sort of bringing up the women, we've seen that women and diverse teams as fund managers tend to hire more diversely, right? So you have a team that looks much more inclusive versus a homogeneous teams. And these small knock-on effects, these small ripple effects, we see that, when women, female founders, female fund managers, so first they tend to hire differently, they tend to provide different support systems for their teams. And then on the back end, they also tend to invest their hard-earned money differently too. The way they put it back into their family and their communities also looks much different than what we see sort of male fund managers do. And I think we can't underestimate what those knock-on effects do of not only having women visible in these seats, but also what their dollars are doing behind the scenes and really for the teams and the organizational charts that they're building up with their companies. So there's some hard data and some soft data on that. But I think at the end of the day, having more women in a position to hire and build teams is really a pretty amazing dynamic for lifting sort of the entire ecosystem.
And as I mentioned, you've got quite a lot of statistics there around better performance of diverse managers. I can put some of those in the show notes and the sources they came from. Has that been your experience too in your allocation? Have you been pleased with how these investments have performed?
I have. I really have. I think it's pretty impressive to see, particularly some of the statistics coming out of venture and how, I think less than 2% of venture funding goes to female founders. We've seen over and again in my portfolio as well that these female founders tend to run their companies differently, which of course improves the performance of the fund. And we're seeing really early multiple up rounds. And I think that's because some of these teams have just learned to be more resilient and more scrappy. They're not getting the dollars that maybe are going more broadly to male-led teams. And so they're learning how to make a dollar go farther. And then they then return more on top of the dollar that you've invested. They've just really learned resiliency. And as I look out at sort of this wild market ahead and the one we've come out of in 2022, I can hardly think of a word in practice that could be more meaningful to portfolio management than resiliency. And so to see that in these gender diverse teams, both at the founder level and at the fund level, which then leads to better performance at the asset management level, really all of that embedded resiliency and doing more with less is the world we live in. And these long gone are the days of growth at all costs, right? I mean, people are digging in on really sustainable business models and not burning cash and being very, very deliberate with hiring. And we've just seen a massive efficiency really as a necessity happen over the course of 2022. But a lot of the female teams I've been looking at and working with for a while have already been doing this. They never let go of their valuation principles. They always had runway for cash for their companies. They've always been really maniacally focused on efficiency and support in terms of the best utilization of dollar invested. And so it's really great to see that they are shining in this difficult environment for many.
I'd love to talk about some of the work you did back in 2014 as a diversity fellow. Clearly, this is now 8-9 years ago. So what were some of the initiatives you worked on there?
Sure. Yeah, that has been a minute, but it was such a great program. It was a really wonderful way to kind of pull out of my industry, just sort of the small silo that is finance, and really have broader discussions with state leaders through whether it's politics or corporations, nonprofits. I mean, it was really an incredible cohort of leaders elevating the conversation around diversity. And yeah, that was some time ago. So, this isn't just a new problem. We all know that it's been with us and we've been noodling solutions for a long time. And, I think sometimes those solutions elude us a little bit because I don't think we give enough awareness to just the fact that we all have inherent biases. Everyone has them. Biases they're passed down to us from our parents. We see them in our peer group, at our offices. They're passed down from our grandparents. I mean, these biases are built up in our DNA and they can be very subtle. And I think that's just what that sort of pesky problem is moving beyond these biases. And I think the first way we really do that is recognize it, which is why, I've really been so focused on trying to suss out the data, right? In the financial industry, data is really king. And there's so much data out there around diversity in venture, diversity in hedge funds, diversity at the founder company level, risk management. We have reams and reams of data, and it still doesn't seem to be really shifting assets forward to these managers in a way that one might expect some of this positive data to show. And so I think that really is, again, goes back to what I learned with this cohort in the fellows program is that biases will trip us up. And we really need to think deliberately and kind of own up to the fact that they're there, we have them, and how to move on as imperfect humans and really look at the data, check ourselves, make a practice to do better. be more intentional with our actions, particularly when it comes to areas where we know the biases are more pronounced, right? Like in investment, because I don't think that maybe the way we've been operating lately that, diversity will just happen, right? These women and these gender diverse teams should just rise to the top with their performance. Like it will just happen on its own. And I don't think that's the case. I don't think diversity happens by accident. 97% of allocators in this country are white and male. Biases are such strong pulls that they really lead us to want to invest and be around people that look and think like us. And I think that's a real problem. And, I think that's one reason why being particularly deliberate around investing in diversity is very important. And I think one big solution to that would be to have more women investing in women.
You mentioned the allocators being predominantly white and male. However, I think you have a statistic around wealth management in women's hands and where that's going to be by 2030. How do you think that's going to change the game? And I presume we also have to be intentional about that, ensuring that the women who direct the wealth actually speak up for where it gets invested.
You hit it on the head, Ethan. It's really about making sure these women feel confident enough to speak up. And I think that goes back to our earlier conversation around jargon and gatekeepers in this industry, and really like these sort of screens that are meant to keep it sort of mysterious and inaccessible. And so I really encourage a lot of the women that I know who are, they might be entrepreneurs, maybe they're incredible philanthropists. Maybe they've, moved up quite quickly through their corporations. I mean, there's some very savvy women out there with incredible skills for understanding metrics around performance and impact and skills that they maybe didn't realize were applicable to investment, but nonetheless, they have them. So it's really saying just because you don't know the jargon and maybe you haven't felt comfortable to speak up, you know a lot more as a woman paying attention in this world than you can possibly imagine. And I think that confidence is so important because, yes, there is a really powerful study by UBS out there that says by 2030, women will control 2/3 of the wealth in this country. That's only 7 years away. So when I think about women coming into this wealth and the massive exponential impact that these women could have by investing this money in women-led and gender diverse teams, it's monumental. I mean, it's a game changer. I think it will be the tipping point, but we still have to get these women to step up and to feel emboldened to make some of these moves, to talk to their financial advisors, to talk to their partners, to talk to their family offices and say, this is important to me. And, you don't have to have all the right answers. You don't have to have an end game. You don't have to know all the right people or have a full network or ecosystem built out. I think small steps can be super meaningful. And, those usually start with just asking questions of financial advisors. How diverse is my portfolio? Who's managing the funds that I have? What do the teams look like? And it's not to say that male or female is better or worse. I'm not saying if you have a male financial advisor, go find a female one. I'm just saying, make sure you're aligned. Make sure it's their job as a financial advisor to follow your lead and to help you align your investments with your values, with your lifestyle, with your goals. So saying as a woman of wealth to say, I want to allocate more money to women founders, women teams, this ecosystem is quite a powerful shift. And I really think that 2/3 of that wealth, if we could just move 1/3 of it, I think we'd really start to see some pretty incredible systems change in this country. I think that would begin to speed up more parity in the financial management space, which would, that just might make capitalism work for everyone.
It's an exciting prospect. It is certainly it's an exciting prospect, especially when you look at the time frame that's involved there. And thanks to people like you for kind of highlighting the kind of questions that can get us there. I'd just like to turn to some closing questions now, just as we found, obviously, your career and the journey it's taken. Would you say there were any highs and lows in there, and any maybe particular, when you think about some lows or some setbacks, any lessons that you learned?
Yeah, I mean, I think there were definitely times when it was hard to find purpose in what I was doing. It's not always easy for a woman in finance, whether you're a young analyst or sitting in a seat as a portfolio manager. I've been equally as frustrated, both in my early 20s and in my early 40s. And so I think really it's just a matter of understanding their peaks and valleys. And at the end of the day, I think finding purpose in what I'm doing is really sort of the thread that continues to pull me through. There, as I look back on my career, and I think, there were definitely times when I thought I should throw in the towel, and you don't feel necessarily as supported as you'd like as a woman. I think it really took all of that, the good and the bad, to get me to this moment where I am right now, to sort of have built up the confidence, the network, the ecosystem, the knowledge, to now pivot a bit to something more purposeful, more intentional around wealth distribution. And I wouldn't have gotten there without the ups and downs. So I'm grateful for them.
And what do you think about any key role models or mentors that you had, or anyone that influenced the course of your career? Is there anyone that you can mention there?
I regret that I never had a quote unquote mentor. There are many women in my industry that I looked up to, but we didn't always track exactly alike. Sometimes they didn't have families or had different priorities. And so I really struggled early on, 20 years ago, to find a quote unquote mentor. So I definitely encourage people to really work hard at that. I think that's so important. But I was really lucky to have exceptional parents. So in a lot of ways, they were my mentors. My dad was really a smart pioneer in sort of allocating our assets as our family office got started, and really had such graceful humanity in the process too. A lot of empathy actually in finance I learned from watching my dad. And then my mother, she was just an incredible mother. So as I navigate the challenges of a working mom, really having her example and her, the things I grew up with, family dinners and the priority made on really being together. That's the balancing force. I think, after a busy day, I look forward to going home and sitting around the dinner table with my 3 kids and my husband. I would say that priority and that focus on family, I really, really got from my mom.
You're not the first to have had no official or formal mentor. And I think that's the important point to draw out of some of these conversations, is that it's not a must-have, it's a nice to have. And sometimes it's a lucky to have, but it's actually, you can still forge your career notwithstanding. When you look at some of those words of wisdom, maybe that you learned from whether your parents or from other people in the industry or outside the industry, is there anything that you can share there?
Yeah, I'll say this is totally outside the industry, but I recently spent some time with a Native American healer. He's a deeply Christian. I walked into my session with him, and he read me like a book straight away. Of all the things that came up in our session, his advice to me was very simple: show up, deliver, move on. It was really sort of at the beginning of this transition I was making in terms of moving towards more intentional, diverse investing, all the big things I was carrying and all the things I was sort of shifting as I looked forward. To just break it down so simply was so helpful, because I think to me and to anyone who is listening, I think that means, show up. But if you have a presentation, be prepared. If you're just living your life, be present, just show up, right? Deliver. Do what you need to do, take your action, and then move on, because we can't keep clinging to what we would have done better, or wish we thought of, or woulda, coulda, shoulda. So I feel like every morning I wake up with that intention for the day of show up, deliver, move on, and just do the best I can moment to moment. That's been really helpful.
I absolutely love that. And I'm going to try to take that to heart, especially as we're emerging from the sludge of the winter weather and the dark days. My last question is around any advice you might have for your younger self. Is there anything you would say to that young aspiring writer who found herself in finance?
Yeah, I think I would say, don't be so polite. speak up. I grew up in a big Southern family, and we were all raised to be polite. And I'm not going to knock my mom on that. I'm so glad I was raised to be polite. But I think when you have a diverse perspective, right? Say it's that sort of that reading, writing, that more empathetic sort of intuition I had, so to speak, in finance. I saw things differently than other people did. And I didn't always speak up around that because I don't think I felt like it was sort of in that common, I don't know, that expected sort of approach to finance. It wasn't maybe data, maybe it was more intuition, or maybe it didn't seem applicable because felt like I was the only one thinking that. But, I really want everyone, especially women, young women, to know that, usually that thing that you leave unsaid or that uncomfortable question in your head that you'd really like to ask is exactly what is required in that particular moment. So to feel emboldened to step up and ask the question or make the statement or say, oh, about this, something doesn't feel right. Could we look at it this way? I think those small moments of courage are what will shift us forward too. So,
Well, that is great advice there. It is thanks to cheerleaders like yourself that the next generation does feel emboldened to step up. So thank you so much, Kate. It's been a pleasure to listen to your journey, to hear its ups and downs, and to hear how you have now committed to making a difference to the next generation of female founders, fund managers, investors. It is so empowering to know that from many corners of the country, they will have your cheerleading and your support. So thank you for coming here and sharing your insights with us.
Oh, thanks for having me, Ethan. It's been so fun to talk with you.
I'm Ethan Devitt. Thank you for listening to the 50 Faces podcast. If you liked what you heard and would like to tune in to hear more inspiring investors and their personal journeys, please subscribe on Apple Podcasts or wherever you get your podcasts. This podcast is for informational purposes only and should not be construed as investment advice, and all views are personal and should not be attributed to the organizations and affiliations of the host or any guest.